Well, hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we always do it from a neoclassical perspective. Each time we ask ourselves what happened the last week and what does it tell us about the coming ones. I do the show every Sunday night and do another show 4 times a week, and that's Monday through Thursday. It's at the same time broadcast at or before 8 or 10 o'clock Eastern time. It's archived on YouTube. It's under the channel LA Little. And if you subscribe, then anytime content is pushed, you'll be notified. As far as what happened with these markets, you can see the numbers here. It was back up the other way last week. They're sporting gains on the year, with the exception of the Dow Jones. If we go over and look at the indexes themselves to see what they're doing, and we start in on the daily chart, all we have is a range. We've had a range for I don't know how long, right? It's been since December, depending on how you count it. Maybe it was February, but you've had these big spikes up, big spikes down, and this continuation of spiking up and down is inside this larger range that's about 90 points in width. And that 90-point range has pretty much defined everything about this market for the past, it's been 6 months, right? It's February. Remember we made that little push up in February into March? Now that's been this range ever since. So when we look at the range here and then we pull it over and we can see it on the weekly quite clearly, we have either consolidation or distribution. And you can argue either one. Nobody will know the real truth until the time comes and this thing either breaks out and heads higher, right, or it eventually breaks down. Now, you can imagine what the difference is, and that is that you have this rolling top. That could be a major top in the market if it really is distribution, or it could simply be some sort of a stepping stone where they mess around and eventually prices move back up and go topside. So that's the scenario. How do we know which one? Well, you really don't, and you won't until there's some evidence of either a breakdown or a breakout, and one that actually sticks. Now, this range that we see here, we also see overseas. We see it more clearly in Europe at this point. And so if we bring up a European chart, and we'll just use probably the strongest one right now, which is France. And if we look at it here, and pull this one back, put it on a weekly, you can certainly see the same sort of a range type pattern that has been taking place. And so if we go back and put in that range since the beginning of the year, the big spike up, right? You came off the December lows, you spike up, you go up there and you've held that range now for basically all year long, so we're talking 7 months. That range, even though tested, right, that range has held. It just got expanded to the downside over the past 3 months. Now it's pushed back up, and now we're up into the upper half of the range. Not all of them look this strong, and this is the strongest. I picked the strongest to try to show the range. Again, the question is this consolidation or is this a breakdown? And we'll know that when this thing breaks out one side or the other. So that's what's happening. That's what has been happening. Nothing's changed. It's the same thing. And finally, if you move over and you look at Asia, and let's use the Hong Kong because that one's probably the cleanest. If you use the Hong Kong index, and take it off this, put it on the weekly, you can see a range here as well. And that range, actually it was interesting because I thought that range would be here. Well, you had this massive spike down on huge volume, right? That took the range all the way back basically to the lows and did the full expansion. So in other words, you had what looked like to be a top range, and then you broke down and you basically did a range trade down to the back side of it, almost equidistant. Now it's wallowing in this area and potentially could test this bottom again or the top, but the ideal here is that you do have a range, even though it is a tremendously large range, and we're talking about 6,000 points or so on this one. And so there's range trades everywhere. And these range trades, if we pull back to the monthly chart, are really a reflection of what's happened in terms of the monthly chart has been a steady continual pace to the upside, 45-degree angle or so, which is typically what you see in these nice pushes that can continue. And so you have here in the Hang Seng, you have that taking place. If we go back and look at that French market, for example, you can see it there as well. And so if we drop in here on the monthly, you can see that 45-degree angle, the same sort of, angle, ascending angle that's just working its way higher. And that is a sustainable, right? That kind of a move is sustainable. Now you can get the pokes under it and the pokes over it, but essentially you got a 45-degree angle heading higher. And finally, if we come back to the US markets, there you have the same thing as well. You have a 45-degree angle, and actually it's probably a little steeper. Let's look at it on the monthly. So draw this one back to the monthly, and you can see here this one's been more steep in terms of the angle. So the angle here is a little bit more than 45, and it's starting to level out to like a 45. So, can we undershoot? Can we come back and make this whole thing a 45? Well, certainly we can. We can undershoot back to here. That's definitely a possibility when we look at this. So range trades everywhere, still the same, nothing's changed. When I come back, we'll talk about where we think we go from here.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
So as we come back here, one of the things I want to talk about is, in trying to determine where the market goes next, is that there's a relationship that exists between the general market, the major sectors, the qualified trends of those things, and the stocks that make up those sectors. So in other words, you've got stocks that move sectors, sectors that move markets. And so if you go backwards, right, we were just looking at the general markets, not only here but around the world. If you go back, there's sectors that make up these general markets, both here and around the world. And then, of course, the stocks that make up those sectors. And when I look at, on an intermediate term time frame, what things look like, right, I've got bearish, I've got bearish, bearish, bearish. I've got 4 of the major sectors bearish, 1 sideways, and then we've got 5 of them, or 4 of them still bullish. So you can see the split: 4 bullish, 4 bearish, 1 sideways. So is it any wonder that we have a market that can't go up, can't go down? It's kind of reflected right here. Those sectors are reflecting exactly that. And if we go look at those sectors and we look at them on a monthly time frame, and I'm starting with the transports because the transports get a lot of airtime. If you look at the transports, that was an unsustainable run. Just like we were talking about, the S&P was kind of unsustainable. If you do the 45-degree angle, this is just coming back. Just like we were looking at the S&P and saying it could come back into this area, that is in fact what's happening, and that's happening here on the transports. If we look at some of the other sectors, let's take energy, for example, which has been beaten up pretty badly, and look at this sector on a monthly time frame. Right, that too had an unsustainable drive to the top side. So in other words, when we look at the angle of ascent, right, that's a far cry from some sort of a 45-degree angle. So what has happened? It's come all the way back. It's broken underneath the swing point. It's actually broken under this one as well now, right? It's come all the way back, And this one is evening out in the sense that it's underneath, and now at some point it's going to be a buy, right? Things will flip around and this will be viable. But it has a sustainable trend, assuming that the trend is still going to be higher, at some point it's going to be higher. Right now it's bearish. And so if we go down the sectors and look at all of them, and then look at some of the swing ones like, say, the XLI, right, where the XLI has had this big, strong, unsustainable trend up in terms of the angle. Move the angle out, what is it doing? It's coming back to something that's more sustainable. And usually as you roll back over, you get lower than that 45-degree angle. You come back in lower. And so I suspect that that is what's playing out. And then if you go to the strong sectors, at least the ones that are strong now, and you look at their angle of ascent, right, and this is the financials had that unsustainable angle, then they started to even out. And now if you draw it in now, what are they? They're about right at that 45-degree mark, right? It's kind of a sustainable drive towards that higher price. Take another one, take technology. What does that one look like? Well, technology, if we draw it out and try to do a 45-degree angle, what does it look like? Well, it's still above it, right? So we have parts of the market that have done really well and continue to do pretty well. Still unsustainable moves in some manner of the word. I suspect if we looked at healthcare, we'd see the same sort of thing. Then you have other parts of the market that don't look nearly as luscious, shall we say, as these. For example, if I do healthcare, you can see how much of an unsustainable move it's been making and still is making. It hasn't even begun to slow down. These will not sustain over time. At some point, they will gravitate back towards that basic 45-degree angle. They always do. And so when you're looking at this market, the real question is, are the strong ones going to come in or the weak ones going to come up, right? Or is it going to be some combination of them? If it's some combination of them, well, I guess we could go sideways forever. But if we look at those markets and then we start breaking them back down, for example, if we take the healthcare and go back and look at the weekly, the intermediate term time frame is usually where you find things happening, right, that's going to affect the longer term. And so if we go back to here, we see a high volume low. Then we see a nice push up here on some volume in these areas, these bars. So that's a pretty good support zone. You can see it here, and you can see it at the bottom of it, right? It's in both sides. If you break under this, right, then you're going to start coming back into that 45-degree angle. So you have places on the chart that give you a fairly good idea about where things should or should not go. And if they start going underneath those areas that they shouldn't go under, right, then you know these areas of the market are starting to succumb to the weight, that is out there, that is always out there, that kind of moves them back towards the 45-degree. And this was the healthcare we were looking at that was quite unsustainable. So when the healthcare starts breaking down some of these key areas, then we know we're going under some of those corrections that you would expect it to go under at some point. And so those are the kinds of things you watch. You've got basically 10 sectors to watch in the aggregate that make up the S&P 500. And if enough of them all start looking as if they are starting to break down, then you know that you may have some sort of a topping situation taking place. But barring that, and right now we don't quite have that, barring that, you can't just jump to that conclusion. You still have to get the benefit of the doubt to the trend. And the trend, as we've seen over and over and over and continues to be felt, is to the upside. It's not to the downside yet. It is in some of those sectors, but some of those sectors are getting pretty oversold. Some of them have farther to fall. Here's another one. Let's look at XLB, for example. This is another weak sector. How far can this one fall? That's the weekly. Go to the monthly. You can see it's just coming back to that area that it should come back to. And so I don't know that we're at a point yet. There's about your 45-degree angle, so it's right about there. I don't know that we're at a point yet. The real question is, do these deteriorate further? And the way you're going to know that real easily without these 45-degree angles is go back and look at your swing point lows. If you start breaking here, right, that's going to be a break on the long-term time frame. And so far, there's only one that's done it, and that's the energy. The energy has been the leader to the downside. If we get another one out here, I'd get a little bit more worried, especially if we get a couple out here. This is one possibility, XLB, it's coming down towards those areas. You start breaking there, then we've got something to talk about. But for now, it's not. I'm going to leave it at that for tonight. Thanks for joining me. I'll see you as the week unfolds, and we'll follow these markets for another fun-filled week of sideways action, probably. See you then. Take care.